Now, a week ago, Apple overtook Nvidia at the top of the market, betting on AI monetization over AI capex. But today, the company that's spending the most on AI capex has just gone ahead and proved that bet isn't universal either. Well, before we get into the further details of what is happening as far as Amazon's overall journey is concerned, here is, of course, another journey I would like to take you down to, which is the fact that Cypher, yes, India's biggest AI summit and expo, is back in its 10th edition, which makes it bigger than ever. It shall take place at KTPO Bengaluru, and it will happen in October of this year. So if you're very serious about your AI and tech, which I know you are, then I'm pretty sure you will be at IBM Presents Cypher 2026. And now for Amazon. Now, Amazon's market value has crossed $3 trillion for the first time on Monday. Shares rose roughly to 4 to 5%, hitting a record high of $285.01. Yes, Amazon stock is up more than 23% this year. It took the company just over 2 years to add this second trillion, after first crossing $2 trillion in June of 2024. Now, it of course now joins Apple, Microsoft, Alphabet and Nvidia as only the 5th company ever to reach this landmark. With Nvidia still sitting on top, by the way, near $5 trillion. Now, of course, this didn't really happen out of just nowhere. Amazon reported Q2 earnings last Thursday, and the market's reaction wasn't really very subtle. AWS revenue $42.2 billion, up 37% year-on-year, beating estimates of $40.54 billion. AWS operating margin is at 39%. The total company revenue is $200.61 billion, ahead of the $196.47 billion Wall Street had expected. Now, adjusted EPS came in at $1.97 against a consensus of $1.82. Last week alone, shares recorded their biggest one-day jump since April of 2012. And here's, of course, the number that actually usually tends to spook investors, but it didn't this time. CEO Andy Jassy raised Amazon's 2026 capital expenditure guidance to $220 billion, up from the earlier $200 billion forecast. Now, his own reason for doing this is rising memory prices, which are tied to the broader AI build-out. And his framing of demand itself went something like this, and I'm quoting now: even at that amount, we will still not have enough capacity to meet all the demand we have in 2026. Now, the demand we already have for 2028 is striking. Well, end quote. Amazon's own AI and custom chip businesses are each now clearing $25 billion in annualized revenue run rate. And two of the biggest names in AI have backed that with very real commitments. OpenAI has committed to 2 gigawatts of Amazon's Trainium chip capacity starting in 2027. Then Anthropic has secured up to 5 gigawatts. Now, here's where it's actually very interesting. A contrast this earnings season has gone ahead and produced. Amazon and Microsoft are the only two of the Magnificent Seven to report this quarter and get rewarded for it. Alphabet, Meta, and Tesla all saw their shares fall after reporting heavy AI spending. Even Apple, fresh off overtaking Nvidia, has just took over a week ago, saw its own stock dip on weak revenue guidance. So then the question is, why did Amazon's spending get applause while, well, the others got punished for the same aspect? Now, the difference looks quite structural and not very sentimental. Amazon's capex increase came attached to named customers, OpenAI and Anthropic, and then immediate margin expansion, which is 39% at AWS. Spending that's clearly converting into contracted revenue reads very differently to investors than, of course, just spending framed mostly as a bet on future demand. Now, of course, for the macro picture. Apple has briefly overtaken Nvidia on a bet against heavy AI capex. Alphabet has posted 82% cloud growth alongside negative free cash flow. And now, Amazon has crossed $3 trillion on the exact AI infrastructure spending model. So investors basically just punished elsewhere. Same industry, same AI story, but very wildly different market verdicts within the same 2 weeks. And here, of course, is the front page take. Now, this is the market which is getting sharply selective about which AI spending story it tends to believe. Not spending itself, by the way. Now, whether that spending has a named customer and a margin attached to it, well, that's the question. And of course, there is also another question. Is Amazon's $3 trillion valuation proof that AI infrastructure spending finally has a very durable payoff? Or does NVIDIA's earnings report later this month decide whether this rally has very real legs attached to it? Please do let us know. What are your thoughts in the comments below? This, ladies and gentlemen, is Front Page by the IM Network. Like, share, subscribe, and always remember, think AI, think AIM.